Absolutely. Welcome back to the afternoon session. Thank you so much. Really excited to be introducing a really good friend of mine here on stage. His name is Markus Bussler. I'm not sure if he needs much more of an introduction, but I think he's Germany's most accomplished, most well-known, yeah, I know, resource journalist. He writes a newsletter. He writes for a magazine. He hosts his own TV show on the Aktionaer TV. I'm really excited that he's here. He's been spending the last 2 days here with us, so I'm really appreciative of your time, Markus. And I'm pretty sure you'll enjoy his presentation because Markus has got some fantastic insights. He does site visits. Not every journalist actually ever travels. They're usually just desktop journalists, so it's really difficult to get a first-hand experience. But because I know Markus so well, I also know his network quite well, and I know who he's talking to on a regular basis, and I think you can definitely benefit from his expertise. So Markus, I'm really thankful for you to be here, and please, take it away. Thank you so much.
Thanks very much, Kai. Ladies and gentlemen, before we start, I want to tell you a story. A couple of years ago, it was back in 2015, this guy just left the stage, Kai Hoffman, the guy with the beard. He gave me a call and he says, hey, Markus, want to come to Vancouver? And he says, Vancouver sounds good. What are we doing here? We're going to a conference. I said, sounds good. Let's do a conference in Vancouver. What are we doing there? They are looking for a speaker. I said, great, who is it? It's you. And I was like, well, okay. So we ended this call and going to bed, and I wake up in the middle of the night and was like, wait a minute, did he say Vancouver? These guys over there speaking this strange language. It's called English. And Kai probably knows my English is good enough to order some food and drink, obviously. But doing a presentation in English, no way. There must be a translator or a huge German audience or anything like that in Vancouver. So just to make sure that the next day I gave him a call and said, hey, Kai, this Vancouver thing, they got a translator? No. They got a huge German audience there? No. What do you mean, you're doing this in English? And now, no way I'm doing an English presentation, never again. So a couple of weeks later, we landed in Vancouver. I'm stepping up this, I remember it was 3 steps to the podium and looking at this huge crowd of about 5 people. And remember, 2015, the gold price just hit $1,050. So, and it was a complete disaster. So it wasn't that I was sweating, it was more like rivers running all over my body, and I felt like a diving suit with the water coming from the wrong direction. And it was a disaster. 7 of these 5 people left. And so after this, and it was the worst 20 minutes of my life, I promised myself I will never ever do this again. So a couple of weeks ago, this guy gave me a call. So why I changed my mind is because I feel a little bit guilty because I'm visiting this conference on a regular basis and going there every year. And Kai did a couple of interviews with me. And every time he asked me, what about junior miners? And I said, I'm not investing in junior miners because it was a disaster over the last couple of years. And things changed. And this was quite unfair because this is a junior mining conference, and telling the host, well, I'm not interested in junior miners isn't fair. So a couple of things changed over the last couple of months, and I think it's a good thing investing in junior miners now, investing in junior miners a couple of months ago. And I will tell you why. And this is the title of my show is Why Now is the Time for Junior Miners. And first there's a little recap of who am I, and Kai introduced me in a very, very special way, so thanks for this. My name is Markus Bussler, and I think he told everything about me. And it's not about me, it's about this guy. It's born 2015, a new gold bull was born, and at the beginning, it was a little bit of slow, but I think what's now is some kind of a perfect storm for the gold price. And this chart is about a couple of days ago, but we set back a little bit, but it's actual. So first of all, it started with central bank buying. Remember, central banks have been net sellers over the last couple of years, and until 2010, 2011. And hey, wait a minute. I just recognize, if it all starts with central bank buying, does that mean central bank money is the smart money? That's weird, right? Just to be fair, it has been the central banks of China and from emerging markets that buying gold. It's not the Western central banks. They're still sitting there and not selling anything, but not buying anything. So But this was something that's changed the whole sector, because on the physical market, suddenly there's a big buyer, the central banks, and they are not sellers anymore. And I think this is something like the fundamentals changed for the gold market. But it's not only central bank buying. It's also the debt problem we suffered in the world, and it's not on the US. The US debt is going up every day. I mean, of course, Donald Trump will solve this problem, but someone got it. But it's also in Europe. France, the huge debt problem, if you see this. So there's so many countries out there. You really have a debt problem and really running a little bit out of liquidity, have to refinance just to get enough money to pay that debt down isn't even possible. So we really got a debt problem in this world. And now the speculators coming back into the market, and we see this. Most of the time, the biggest gold ETFs have outflows of their, they have outflows of money going back to the market, and now it's coming money back into the ETFs, and they are buying gold, and so this also changed the environment for the gold price. Of course, we all know the US dollar is weakening. That's something Donald Trump likes, maybe, but we all know the US dollar is something like the enemy of gold, and this also changes a little bit for the gold price. Inflation still remains a problem, and nobody's really talking about inflation right now, but if we look at what's going on in the world, if you look at the average of inflation in the US over the last couple of, let's say 30 years, it's even more close to 3 than to 2%. So it's interesting to see what the Fed is doing, and it looks like they have started to lower the interest rates, and this should also be in favor for the gold price. By the way, I decided to speak a little bit more slow if it's English, so let's calm down. Mai ist es anstrengend. So I mentioned all of this. We suddenly see something hitting the US economy. Labor market is starting to weakening, and all this should lead into a lower interest rate, and all this could further strengthen the gold price. Look at this. This was from a presentation I did on the Aktionärstag in 2023. I told my readers and all the viewers and everybody who wants to hear it and everybody who doesn't want to hear it, my strategy is buying major gold producers. And I think, yeah, it might take a couple of months, but it was a good decision because Agnico was my longtime favorite, everybody knows. And so buying big producers was really, well, a good idea. But that's not what I'm doing anymore, because now many of these are, well, not fairly valued, but they are kind of fairly valued. Especially if you think the gold price stays at $4,500, there's still room to run, but I think they are in general fairly valued. But what I do is I'm taking some profits from these positions and investing it in smaller stocks and in other commodities. Other commodities means I'm looking at the lithium space again, who is not everybody's darling right now. I'm looking at the copper space for a couple of months now. Copper hitting a new all-time high on the London Metal Exchange last week or 2 weeks ago. And there's still some other commodities like looking at. But the thing is, I'm really thinking it's time to start at the smaller producers and at the exploration sector, because this is usually where the money goes, the further the bull market is going. So I think it's a good idea, but the best is still to come. And now I need my glasses. I was so proud of my eyes when I was in the 20s, but remember, who was in the market in the precious metal space already in 2008, 2009? Yeah. You maybe remember there was a huge run of silver at the end of this bull cycle. And we see this, probably see this, is it the green line? Yeah, the green line. And I don't want to bore you to death with Elliott wave theory, but On this kind, at this green line, the fifth wave of the cycle starts. And if you see, we have an easy double from there in a couple of months. And now just look at the recent chart. And what I really think is, in this cycle, again, just compare it. Well, history doesn't repeat, but it's a teacher for the future. So if you look at this one from 2008 to 2011, and then look where we actually are, I think really this drop back, you see, this setback, this correction we see now, and I think this isn't over. I think we have a good chance for silver going to the low 40s. But this is probably where we have been in 2000 and the beginning of 2011. And from there, the silver price doubled. And I think we could see this again. And imagine if we're going back to the low 40s, I see silver going to $80. This sounds a little bit maybe too enthusiastic, maybe too optimistic. But remember, the fifth wave in an Elliott wave cycle in precious metals is the most strongest wave you ever would see. So I think, in my opinion, it's really a realistic scenario. We're going to $80 next year, not next week. I'm sorry. That's what I want to do in English. So, isn't my English so worth? Yeah, okay. I won't ask you this. Okay. So, with other words, the best is still to come. And so use this correction, in my opinion. I might be wrong. I've been wrong in the past, 1 or 2 times. But I see a good chance to really, you could easily double or even triple your money you invest now in junior miners. Oh yeah, I already told you this without this slide. I'm a little bit proud of me. Just, if you look, I took the SLV, I didn't take the silver price, but the SLV was up over the last 12 months. It was up close to 50%. The junior miners and the bigger miners, ETFs, are up 100%. So you got a leverage of 2 just if you invest in silver miners. And I guess in this last, in this last cycle phase, you will see a double or triple of your money if you invest in junior miners, especially in silver juniors. But not only. I think junior miners in general have a higher relation to the silver price than they have to the gold price, even if they're gold juniors. So, and that's what I think. Pan American, for me, Pan American is one of the best managed silver companies in the world. Of course, they have expanded a little bit more in the gold space over the last couple of years, but it's still one of the best companies. But it doesn't necessarily mean that the best companies is the best stock for this last cycle, because you have better chances with high-risk companies than with these conservative companies. So I think I would prefer, Keith's still here? No. Oh, thanks God. Oh, God. So I think with First Majestic having some trouble over the last couple of years with buying Jared Canyon, but it's recovering. I think buying Gator Silver wasn't a bad move. So I think it's time for a revaluation of First Majestic. Yeah, will they do better than Pan American Silver? I expect so. Even maybe Pan American in general is a better company. You could make more money with a company like First Majestic. And I'm really grateful Keith isn't here. And for example, and this is funny because I made this presentation 2 weeks ago, and Go Gold wasn't in the focus of many people because Go Gold is in Mexico, as we all know, and Mexico was a tough place to do any exploration because nobody really gets a permit for the mine, and there's Silver Tiger getting the permit, even an open pit permit last week. last week, this week, can't remember, last Friday. So it was a game changer for the whole industry in Mexico. So, and suddenly people start looking at GoGold, and GoGold says, we are next with our permit. So this is maybe the story the market wanted to play in this last cycle of the bull market. And so I think these are the companies you have to own to benefit most from the next couple of months. Ebro Silver was also, it's interesting because the change in Argentina's politics, they are benefiting from this, and I think there are many things going on, and it's a pretty decent project. So I think these are the stocks, and of course, if you're from a company here, every of your stocks, the stocks doing best over the next couple of months. And this is what really changed. And we had many people talking about the gold price, and of course all this comes together, but remember a couple of months ago or a couple of years ago, there was no liquidity in junior mining stocks. And every event, even if it's a really good drill result, becomes a liquidity event because there's suddenly coming some buyers in the market and say, oh, looks good, you're doing good, you have good results. And on the other hand, there have been some small funds or midterm funds in Toronto or Vancouver, and they're saying, okay, let's press the sell button, and the stock and it's lower, even if they can put out good drill results. And now liquidity is coming back, and more buyers coming back. You suddenly have a real market, and you didn't have a market up to now, especially in Canada. Things have been a little bit different to Australia because they have other access to capital than Canada has, but it was a really terrible market. It wasn't a market at all. I mean, does it make any sense for a fund to own a stock which is traded 10,000 Canadian a day? I mean, how you want to exit this stock? There's no chance. And suddenly all these stocks trading 10,000 Canadian a day are now trading 100,000 or 200,000 Canadian a day, and they are investable again. And this is a huge, huge difference to what happens just go back 8 months or 9 months ago. So this is a real game changer for the whole junior market, is liquidity coming again. And if you're looking for one reason to invest in the junior mining stocks, it's liquidity. Yeah? That's what I told. I already told. And this is something, I think this is how a market is built, or a bull market is built. Remember, at the top of this triangle, the market was completely dead in general. So at one point, the gold price started to rise, and the gold producers and senior producers didn't rise at all. It was still, the gold price was 2,000, 2,200, 2,500, and all these Agnicos, Barricks, Newmans didn't move. And there was some smart money coming into this market and buying, because they say, hey, the margin of these companies will go up with the gold price. And this was the first sign of something is going on there. And some turnaround stories. Think about Kinross. Think about Kinross. Owning Kinross 3 years ago was one of the worst ideas you could have. Or IAM Gold. Owning IAM Gold was one of the worst ideas you could have. But these are stocks suddenly showing some signs of life. And then some general investors coming back and buying these well-known companies. Newman, Barrick struggling for a long, long time. They have been underperforming the gold market for a long, long time. But at some point, they're coming these general investors, and hey, what I remember, there was this Newman thing and this Barrick thing. Wasn't it Barrick Gold? It's now Barrick Mining. I don't care. I buy it because it's Barrick. And this is what happened in this third stage of this bull market. And I think we are somewhere between this third and fourth stage of the bull market, because now the retail investors coming back into the markets, and they are a little bit more gambling with junior mining and bringing a little bit more liquidity to the market. And this is what's going on right now. And I think we are between the third and the fourth stage of this bull cycle. But we already have some warning signs. And this is what I really wanted to give you on the way, because we have some of these, there's some strange acquisitions going on. I don't say it doesn't make any sense at all, but Fresnillo acquiring Probe Gold was like, wow, the guys of Mexico stepping into Canada. Are there no projects left in Mexico? Are they afraid of the permitting process? Remember, this was before Silver Tiger got the permit. Or what's going on? They didn't bid for Max Silver, but they're now buying Probe, a gold project in Canada. Why did they do this? Kerr acquiring New Gold is something raising some question mark, because New Gold has some good assets right now with New Afton and Rainy River, but does it fit together? I mean, now New Afton is a copper mine fitting into the Kerr portfolio. I'm not really sure. It might be a good acquisition. I see no really synergies in this, but at the end, it's really strange. Gold has entered the mainstream. We have this in Germany. We know the Bild-Zeitung. And suddenly some headlines covering gold, and you are like this, oh, we are on this stage again. It's entered the mainstream. So yeah, it's a little bit of a warning sign. And it was a little bit of a parabolic rise we saw in the gold price. And think about it. If you would ask somebody about, let's say, 1 year ago, and you would say, we're standing here at the Deutsche Goldmesse in November and complaining about a crash in the silver price to $50. Everybody would call you crazy, but this is what happens yesterday. So just imagine if silver is hitting this high I anticipated at $50, everybody would standing on the rooftop and cheering and partying. And if this happens, I really strongly recommend you take some chips off the table, because this might be another 2011 event. So doesn't mean we need another 15 years to get to a new all-time high, but I think from this point, it's really on the risk management side to take a few of your hard-earned money out of this market. You can re-enter at any point, so there's no need to go through a new bear cycle. So Kai asked me to have about 5 to 10 minutes to answer some questions. We are in between. So Kai, perfect. It's on you.
Oh, now it's on me.
It's on you.
No, I appreciate it, Markus. Thank you so much. That was fantastic. Let me moderate that a little bit.
By the way, if you have any questions, you can ask it in German as well. So
we can do that as well, absolutely. Do you have any questions for Markus?
So I can go home with my person.
No.
How should I balance investment in gold and in silver? 50-50?
I wouldn't do it 50-50, but I would say 60-40. 60% gold, 40% silver.
60%?
If we're talking about junior miners, or we're talking about metals itself?
The junior miners.
60-40. If I say, if we're talking about metal itself, I would more do like 80-20. 80% gold, 20% silver.
Now, if Santa Claus would give you a magic crystal ball,
No.
what would you say will be the price of silver in 2 years?
In 2 years?
Yeah.
I guess if what I just told you, if this comes true, a crystal ball would say we will be, in 2 years, we will be lower than in 1 year. I think we are going to $80 and going to do a correction. So I guess we are more likely in 2 years to $50 than to 80.
Do you see scenario? Basically, you tell the public here, when it goes to 80, bailout.
Yeah, that's what you don't have, I have no guarantee for that. If you want a guarantee, buy a new car. So, but that's what I see.
Your gut feeling.
Yeah, got many feelings.
They're called butterflies, Markus.
Do you see a scenario 5 to 10 years, silver going up? And I have read many such reasonable, let's say, opinions, 300, 400, 5 to 10 years.
In my wildest dreams, no. I mean, I know what we are talking about. We're talking about a very inflationary environment where silver could go up. But I really don't see this. If we follow the cycles of gold, and this is a little bit more technical from my point, after such a strong run, and we have a strong run, we have a parabolic run, it takes some time to recover. And we need a correction, a consolidation, whatever you will call it. And I don't think in 5 to 10 years we had 300, maybe we had in 3 digits or 100, 150, but I don't see 300. But I might be wrong. Of course, it's possible. Everything is possible in the stock market. So again, I can give you a guarantee, but this sounds a little bit too optimistic for me.
Do you see, let's say, because I have heard from company owners and CEOs that this big institutional money has not yet discovered they are not in this market. Junior markets or these even producers, they are not.
Agreed. Well, I'll give you an example. One of the greatest investors of all time, Warren Buffett, he hates gold. Okay? I understand why he hates gold, because he became a greatest investor in the 70s, and in the 70s, gold has a phenomenal run. He missed it. So he will forever. He's the greatest investor of all time and missed the great bull run in gold. So he hates gold. And I think there are a few investors out there missing this one, and they will never enter this market because they say, I missed it. So there's a lot of money at the sideline and a lot of money telling me we're going back in the next correction. But typically in gold and silver it's so scary, the next correction phase, what you just what you just saw yesterday, that they say, oh, might be not. And in the next bull run, they say, oh, it's gone too far, too fast. And this is how precious metals markets act. Far, aggressive, frustrating. And we had a lot of time of frustration, by the way.
Fantastic. Markus, I have a question for you. Like, what does your portfolio look like right now? You don't have to mention the
It's
names,
in green.
but it's in the green. There we go. There you go. Buy his newsletter. He's doing a great job. But you mentioned you sold or took some profits off the big miners, but added juniors. Like, what's the portfolio mix looking like right now?
Oh, I think it's 80% juniors and 20% big. No, it's more like 90% juniors right now.
How'd you choose them?
By random.
Random?
No.
Monkey dartboard?
No, I guess, like every investor, talk to the management, say, look at the restriction they are acting in, but there's still some value in some wilder jurisdictions like Ghana or even in Africa. I don't want to go to Mali or Burkina Faso. Don't want to deal there. And of course, Canada is one of the favorite jurisdictions you can act in, but you also have to mix this a little bit. And so this is how I recommend it.
All gold, though? Gold, silver? You looking at anything else right now? You mentioned other commodities.
Yeah, of course, I'm looking at copper and buying some copper juniors. And I'm looking at lithium again, because lithium is, after the last years, lithium is hated by many investors. It's hated. It's time to buy it. Yeah.
Uranium?
I was cashing out a little bit of uranium over the last couple of weeks because this was, again, a little bit too fast and too high. And if you see all these enthusiasm about the Cameco deal and Westinghouse deal, a little bit too hot for me.
Much excitement.
Yeah, same with rare earths. It looks a little bit overvalued.
Oh, topsy-turvy there. Do you have any other questions for Markus? Markus?
The critical metals, because I have more critical than precious metals at the moment. Do you think it's a hype or?
Indeed, as I just mentioned, for the rare earths, it was a little bit overhyped. I mean, we saw this government buying into MP Materials, and there are only like 3 or 4 stocks you really can call a producer, like Liners, Energy Fuels, and all these going parabolic. And you can't really call the top, but it looks a little bit overhyped to me, especially in rare earths.
Simon, you had a question as well.
Yeah, my question is about the sentiment of the, say, the German and European asset management industry. Are they going to change more into metals, not because they love or hate gold, but because metals like silver or industrial metal and rare earths are industrial? Do you see any change in that direction based on how itself that Europe needs to be more independent?
I talked to my good friend Ronald Stöfele about this, and he says, because he's managing a fund and he gets a little bit more insights what institutionalists do than I do, and he says, yeah, it's a little bit change of mind in these investor type, and they're coming back a little bit, showing interest, not saying they're buying, but showing interest in the sector.
We have time for one more question. Yeah.
I wonder how would you think Xi gold compares with Newmont in the next years?
Which one?
Sijin, the Chinese.
Gold and Newmont.
Ah.
Especially whether like the US companies are more expensive than Chinese companies, and will the gap decrease or increase in general?
That's a really good question. Didn't think about it up to now. I really think the valuation, Xi Jinping is probably more China, more Africa focused than Newmont is. And Newmont is more like, oh, let's buy these Nevada gold mine things from Barrick and focus on North America. So there will be higher valuation for Newmont staying for the coming future. If you can deal with the risk in Africa and Chinese managing and different than Western companies, I think Xi Jinping is a good buy, yeah.
Fantastic.
Does it answer your question? A little bit.
Your opinion on it?